What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some other notable names on the market, such as Apple, Amazon, Tesla, and AMD. We're going to give you all the resistance and support points that you need for these stocks, that way you know exactly what critical levels to watch on your own charts. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles. We always like to start off with the larger time frame only because it gives us an idea of what the macro picture is doing. And in this case, on the daily chart, we see that SPY moved back above this blue line, and we're going to talk about the significance of this blue line in just a little bit. But first, let's try to make sense of why SPY rallied nearly all day long. First things first, the first report that came in today was going to be the private sector's payroll, which rose at 113,000 versus the 130,000 expected. So ironically, this is good news. Typically, we want to see strong unemployment, but the fact that we're showing weakness in employment here is good news for the market, because the Federal Reserve's entire target is to bring unemployment up. That way they can control inflation. Now, speaking of the Federal Reserve, also what happened today was the Federal Reserve held their meeting and announced that they will not be raising interest rates, not for this cycle at least. So this is the second meeting in a row that the Federal Reserve holds rates steady at 5.5. But before these two meetings, the Federal Reserve was going on a hiking spree, and they hiked rates for about 11 meetings straight. So both these reports helped the markets push up, and we can see that we ended very strong against everybody else's projections. So everybody was expecting the market to continue its downside move from last week, but here in this case, we can see that markets finished strong. So the blue line that we talked about earlier in this video is going to be the 10-day moving average, and what that measures is the average price that buyers have been willing to pay for SPY over the last 10 days. And clearly, we gapped up above it, and markets continued to rally, and they closed just below the 200-day moving average. Now, the 200-day moving average, if we look back, we can see that the 200-day moving average was a very significant level for us when we broke back above it in March, and then we rallied on for the weeks and months to follow. So for SPY to recover back above that 200-day moving average is going to be our main focus going forward. Yes, we can use the 10-day moving average as support. So if you are bullish or if you are bearish, the first thing you should do every morning is go to the daily chart and figure out if SPY opened above or below this 10-day moving average and where it is in relation to that 200-day moving average. Buyers desperately want to see a move back above this level for the rally to continue. Now, here are some shorter term levels on SPY for the hourly chart, but before we do that, we did forget that we will be going over QQQ as well. So we will add QQQ to this list. So for SPY, if you are looking at it here, you can see that there's a large consolidation range. Right now, the support is at 419, which comes from the base that it formed here. You can see that at the bottom of the day, or the bottom of the support range, was around 419. So we have a support right around 419. If it breaks below, which we are expecting it to potentially break below and shake out a bunch of buyers, that's fine. It's a good place to enter, just around 419 if you're looking to enter calls. And then your stop loss could be just below 416. Now, if it breaks 416 and it does so with strong downside volume, then we will be looking at short or a put position to take down towards 413 and even 412. To the top side, the next resistance in focus after the 100-day moving average, the 200-day moving average. So apart from this 200-day moving average, we also have a resistance at 425.50. Buyers need to break above that level for them to continue the rally towards 429, and the second price target above that would be right around 432.30. Now, for any of you in our group, you know that our target this week was around 420 to 421. We sent this on October 31st to our members, and so far SPY has hit that target. Our second price target is going to be right around that 432 mark, but that is an aggressive price target, so we are not calling it for this week. It may hit that target within the next few weeks, as long as SPY holds these supports right here. Now, the next stock on our watches is going to be QQQ, and QQQ, like SPY, recovered back above its 10-day moving average today, and it did so with strong volume, and it took all of technology stocks with it, primarily because this is the tech index after all. So if you're looking at QQQ, here are the levels that you should be watching. First of all, you have a resistance right around 360.25. So right now, there's not really a resistance in the way. You can argue that perhaps the high of day today is a resistance on QQQ, which would be right around 357.50. So if you want to start off tomorrow and place a resistance right around 357.50, that's completely fine. You can do so. And if it breaks above that level, then you know it's getting closer towards that 360.25. Now, 360.25 is a very strong resistance because QQQ got rejected at this level more than once if you look back here on the 23rd, the 24th of October. If it breaks above that level, these are your price targets, and these are very aggressive price targets. If QQQ is able to move to these price targets, then it will take all of technology stocks up with it. But don't forget that Apple's earnings are expected tomorrow after hours, and we will be talking about some of those levels shortly. But Apple's earnings are likely to influence the entire technology sector, so keep that in mind when you're positioning your trades. Now to the downside, QQQ does have a support right around 352.60. If the market does break below that level, we don't expect it to hold. It could very much just be a shakeout for all the buyers before QQQ goes and reverses back up. We would not consider a short or a put position unless QQQ moves back below 349, and that would also put it back below the 10-day moving average and closer to its recent lows. The next stock on our watches is going to be Apple, which, like SPY and QQQ, also recovered back above the 10-day moving average. In fact, Apple also recovered back above the 200-day moving average. So this 200-day moving average is a very, very significant line, and the fact that it's back above it is a good sign for Apple, especially ahead of their earnings. Now, here are some levels to watch for Apple. Remember, these levels, they almost mean nothing after earnings, so we will be updating these levels on our video on Sunday, so make sure you're checking back in. But if you are watching Apple tomorrow before their earnings, which is expected after hours, the first resistance in focus is going to be the 175.75 level. Above that level, Apple can see that 177 to 178 price target. We will be taking calls with our group if it does successfully break out. Now to the downside, it has a support right around 171.90. If it breaks below that level, then our downside price target is going to be right around 167 to 168. The next stock on our watches is going to be Amazon. And unlike most stocks on the market right now, which is very impressive, Amazon is trading above all of its healthy moving averages. So the moving averages that we have on our chart, which are these colored lines, are going to be the 10-day, 20-day, 50-day, 100, and 200-day moving averages. The more or the longer the moving average, the more significance it holds on the chart. So here in this case, Amazon is back above all these moving averages, but the 50-day moving average, which is this yellow line right here, is going to be something that Wall Street traders and institutional investors utilize to gauge whether a stock is currently in a bullish or a bearish trend. And we can clearly see that as soon as Amazon got above that 50-day moving average, buying volume shot up and Amazon managed to rally all day today. So this is a very impressive daily chart. We are bullish on Amazon, and we are also noticing a ton of open interest on the call side. Here are some levels to focus on. First of all, Amazon has a support right around 134.17, which is right around this resistance point right here. Now, when a stock breaks above a resistance point, which is a point in which buyers were not willing to pay above at a certain point, once it breaks above that level should automatically turn into a support. So we have placed a support right around that level. Amazon can consolidate above that level and it will remain bullish. The next resistance that it needs to break out above for a continuation is going to be right around 139.37, and these are the next price targets for Amazon. But these are very short-term price targets. We are expecting a higher move, and we will continue updating Amazon as it develops in the weeks coming. To the downside, we would not consider shorting or playing puts on Amazon unless it breaks below the 130 mark, which would also place it back below that 50-day moving average, and it will put it at risk of filling this gap down towards the 121 level, and that is a very aggressive target, so we do not expect that to happen this week. If it does do that, it will happen over the next few weeks, but for now, Amazon is currently bullish. The next stock on our watches is going to be Tesla, which has been one of the weaker stocks on the market, all thanks to its most recent earnings. Earnings did not meet expectations, which caused this massive drop. and it's causing Tesla to lag far behind the market. In fact, Tesla is the only stock so far that we've talked about that has not recovered back above its 10-day moving average. So if you are bullish on Tesla, or if you are looking at Tesla at all, the first thing you should do every morning is open up that daily chart, and you want to see where Tesla's daily candle opened in relation to that 10-day moving average. If you did so on SPY today, and when you saw that SPY open above that 10-day moving average, you knew that bulls took control, and you could have easily gotten calls and placed a stop loss just below that level. Now for Tesla, it's the same exact idea. If Tesla can gap above this 10-day moving average, you can get into calls and use a stop loss just below that point. But if you're not a moving average trader, you can always look at the price point levels, and here are some levels to focus on. If you are bearish on Tesla, you need to move back below 197.85 for a move towards 191.25. That would be our first downside price target. And below 191.25, things can get very ugly very quickly, and Tesla can move towards that 178 target. To the top side, Tesla needs to break above 214.80 in order for buyers to take some comfort in the stock. And then the next price target above that point is going to be right around 222.50, which comes from this rejection here. And above that level, the more aggressive price target would be right around that 231 mark. Now, this is a very aggressive price target, so I wouldn't expect it to hit it this week. We are going to be updating Tesla on our Sunday analysis. The next stock on our watch is going to be AMD, which reported earnings today and they beat expectations. So AMD had a very strong post-earnings rally, and we were bullish on it. We are actually holding a position on AMD with our members, and so far it's looking very good for us. However, AMD failed to break back above that 100-day moving average today. So it moved back above all these moving averages, which is very impressive, and it did so with very strong volume. But notice that it ended the day just below this 100-day moving average. So that means, as we mentioned before in this video, that would be the first thing you should check every morning on the daily chart. Where did AMD open in relation to that 100-day moving average? Now here are some levels on AMD that you should be watching out for. If you are looking for a bullish continuation on AMD, buyers desperately need that 112 breakout. This level has been rejected at 3 times for AMD, once here, twice here, and 3 times here. So buyers aren't going to take full control again until they move it above that level. And above that level, the price target is going to be right around 119 to 120. AMD did form a small support at 105.20. If it breaks this support, honestly, we would not be too surprised, only because it wasn't such a strong support, but it is a support nonetheless. If it moves below that level, then it can move towards 100. We would love for AMD to stay above 100 in order for it to maintain its bullish trend, but if it breaks below 100, then it is at risk of moving back into a bearish trend and falling towards 95 and even 93. The last and final stock on our watch list is going to be NVIDIA, and we're only going to talk about NVIDIA on the daily chart. We just want to point out that NVIDIA moved alongside AMD today after AMD reported strong earnings. NVIDIA's earnings are expected soon, so it will also have some kind of move on earnings. We don't know if that's going to be up or down just yet, but we are leaning bullish on the stock. NVIDIA managed to make it back above that 10-day moving average, but it is still trading below the 20, the 50, and the 100-day moving averages. And on the shorter term charts, NVIDIA is going to need to break above that 440 mark in order for it to move towards a price target of around 447 to 448. Now, we do like the fact that NVIDIA broke above this bullish flag, so if you don't know your patterns, we will attach a patterns cheat sheet for you in the description. It's worth looking at, and it's definitely worth understanding these patterns. This is called a bullish flag pattern that NVIDIA followed through from. However, if NVIDIA comes down from that pattern and breaks below 410, then we do expect it to fall towards a price target of around 395 to 397. So I hope you guys found this video helpful. Make sure you subscribe and like, and best of luck.